Hello, everybody. It is midweek update time. It's Joe with you here on the 17th of August. This month's been going pretty quickly. The markets have been going pretty quickly in one direction, and that is definitely up. So let's get into it. I've got my 2 cents. Built a little class here, presentation. I've got a lot of opinion on this one, actually. So that's all it is. Take it for what it is. Take responsibility for the outcome. You know the drill. Let's get into a market recap. So the majors hesitate after a 5-day surge, and this surge was pretty impressive from last week, just gapping up. I truly believe it was that consumer price number, and it's moved a little bit higher. Now, we hit some pretty good resistance areas that we hadn't seen since the beginning of this year. In fact, the diamonds are at something I hadn't seen since the end of 2021, like in December. I've been talking with a bunch of you guys, and a couple of you are on this class that have identified, and Corey made a great reference to this, that we are kind of in a downtrend on the weekly chart overall, and I have to agree with that. However, the sentiment is bullish, and I am not seeing a whole lot of selling, even in the weaker sectors and stocks. Now, folks, I've got a bunch of bear trades. 3 we'll look at, but I've got 6 that I'm looking forward to getting into, and I'm kind of waiting for a market correction, not a basing that we've seen and then moves higher. I need a bull pullback at least to get into some of my bears. I've done a lot of coaching over the last couple of weeks and found a lot of traders throwing out some bear trades that have actually been hurting them, trying to stay balanced against some of their bulls because they just don't go down. So I haven't seen a lot of active selling in any specific sector or stock unless it's news driven. Newmont Mining is one, but it's in a horrible sector. It's looking awful. It's just getting punished, but it's still not really going down. It's just tapering off and basing lower, and you guys will see a lot of that. In fact, the examples I have, you'll see they're low base breakdown candidates. So the retail sales number was flat. It was interesting because if you take out the energy, it ticked up 0.1%. In light of where we are, that's nothing. That should be kind of a no news event, although the markets did use it. The futures turned down quite a bit, but it was before these numbers even came out, and I truly believe, folks, the markets are kind of looking for an excuse to take a break here. See, I told you I was going to give my opinion, wasn't I? All right, so let's move forward. Here are some of the trade ideas. I love the bullish trades. APH, SO, and PEP. Well, APH and SO came from last week's class, which was awesome. And then down on the bottom, Intel and Meta both came from last week's class, and they all look good. So great work. So let's jump into the bull trades first. Here's APH. Nice breakout candidate. We talked about it last week above the 78 resistance. Let me go ahead and get my pin active. And it did. Isn't that nice? So we're talking about it right here. Had that big surge. Here's that 5-day move that the markets have been enjoying. This has as well. It's pulling back a little bit today, but if I'm a diagonal spread or a vertical spread, especially at the end of this week, I'm still pretty comfortable. I'm hoping that it might consolidate here a little bit, move higher, or your target is above 78. So it still looks really good. The pattern's great. Just a really good trade all around. So good job this class. Let's go to SO. Same idea here. It was a high base breakout. Looks like it was going to try to stay above that 77 mark. Do we want to call it 77? I'll go back here and let's draw it from back here. Yeah, let's call it 77. And it did. So I believe we were discussing something sideways to up or a credit spread above 77. All sorts of different things we could do with this. But I like it. I like it tapering higher. I like it where it's at. And I do think getting into the a trade now, diagonal would be great. I know we've only got a couple of days left, but sometimes it's cool to sell 3 days out to expiration, just to knock down a couple of bucks for that long call. It's one of my favorite things to do if they're available. Okay, let's get into our last one, and this is PEP, PepsiCo. PepsiCo has been on and off of the end of days or our market roundups for weeks, and it has just continued to produce. Once it's a timing thing because you kind of have to sit through these little U's. We call them cup and handles, but it has really produced results, and it just loves to exceed levels, and it's done it again. So kind of a cool trade. This would be a lot more comfortable in a diagonal spread, to where you have a lot more flexibility in the back end, the long call that you bought, so you can absorb some of these little dips, right? And just allow it to cruise. But that last surge over the last few days has been fabulous. Here we up 180. It's a really cool trade. Now, why is it up here? Well, I like to boast about how awesome you guys are, and you pick good trades, but it could be setting itself up again. Once again, I'm really expecting a corrective move over the rest of this week or into next, but it's going to be a bull pullback to create more bullish opportunity. In the short term, I've got some bears that I want to short. This wouldn't be one of them. I would be waiting for this to come back down to this level here and buying it. So it's always kind of neat to see your bulls and bears kind of wax and wane and play with them as they trigger, right? So let's get into the sideways stuff. Now I put this in, and I was thinking, whoa, geez, the deeper I look at this, this could be more of a bear trade. So take it for what it is. I could go either way. However, I'm just not seeing a lot of bear trades follow through. So let's create a range for this. We could go a little deeper if you'd like to this around 10. If this starts to really slip off of that 11 support and break down towards that 10 with a corrective market, we might want to throw out sideways. However, if you do a sideways to down, targeted butterfly spread, calendar spread, $11 put calendar spread is kind of a fun thing to do here. Then you have the ability to take advantage of selling that shorter term and seeing if it can just kind of stay where it's at. Or you can open it up. I've got this here, 13 and 10. Play something in between that. Condor, stuff like that. But a couple of things we could do with this. This has been on, I believe, let me check here, guys. I'm going through my lists. Yes, I've got stacks of Post-it notes. Yep, this was a bear on my bear watch list for a little while. But the way that it's been bouncing back and forth, that line there at 11 is what I'll emphasize, is kind of just got me thinking that maybe it's more of a sideways market, especially if things consolidate and continue higher. It might hang in there. So, hey, take it for what you will. PDD, always on and off our watch lists. I don't know why. It's funny how, I guess there's a few of us out there, but we all are like-minded, so we tend to gravitate to the same things. But I do like it as a sideways move. It can stay above this 45 because it does have some pretty good support at 45 that it set the beginning of May there. Now it does have some solid resistance in this consolidation area at 55. We've got the crossover, right? Inverted, the 2050 or backwards, but this thing isn't screaming sell off just yet. If we get another consolidation like we had through July, let me just re-highlight that, and we could do something between the 45 and the 50, then we've got ourselves a nice consolidation or sideways trade. Now, if you guys want to stay bearish and you want to see if this will roll over, give it some time to get to the 45 and then bust below that, right? Bust below that, and then you can play it to the bear side. I'm totally fine with that. So both my sideways trades do have a little bit of a bearish bias. It just depends on how aggressive you want to be with it. So speaking of bears, let's jump into Intel. Love this trade. Came from this class. What a bummer when we discussed it, because I shouldn't say a bummer. It actually was working out pretty decent. It had a rally, but a bear rally. So hopefully you guys are position sizing for max gain or max loss. This wouldn't trigger. This is not above a pivot point. It never got there. It tested it a couple of times over, I'd say, Monday and Tuesday of this week. Maybe got you a little nervous there on Friday, but it didn't get above it. So for those of you that have sat through a little bit of a bear rally here, you're still in a great position. For those of you who missed it last week, here's another opportunity. It's moving lower. It's got a good confirmation of trading currently below the previous day's low. I just like it here. I just like it sideways to bear. So great job, guys. Then Baba, I guess I could have shown a bunch more, but I jumped to Baba because I just like the descending triangle pattern on this. It's one of a larger mover. Sorry, I just got rid of my pin. There we go. I like the descending triangle pattern on this. I like that it's sticking to that descending 20-day moving average. It's got a support level that it's right at. It made at 90. And you've got a clear target. You know, you can make the argument that this is a small reverse head and shoulders, fine, whatever. I'll draw 2 or 3 lines through this, carry them all the way through, and I've got a target of about 82.5. Right? So if the market's going to roll over, this will break that 90 level. We got a target 82.5, diagonal spread it, targeted butterfly, whatever you guys want to do. Just choose the right time frame. I wish I could give you that answer because I'm thinking about the time frame on this. Gotta give it a week or so. But with the targeted butterfly, you can go a little longer and then pull profits once it reaches your target. You have the ability to do that. It's kind of nice. All right, so I like Boba. And then Twilio. Twilio I thought was pretty cool. Argument could be made sideways, but I went ahead and moved it over to the bearish. Just because, hey, I've got enough sideways stuff. If the markets are going to break down or pull back, this could break that $80 level. Pretty obvious to see, isn't it, on this one? So I do like it. I like the way this thing's been going. I'm going to draw a curved line here because it is just kind of floating down. I like the moving averages. It's trying to just stick between that $90 and $80 level, and that's $10, folks. So this thing does have the volatility and the range if you want to choose some sort of a condor spread, some sort of a targeted butterfly or credit spread below 80 once it breaks that way. There's a bunch of ways to play this. So I like it. I do. So that's what I've got for our trades. Let's get into some market analysis. So as you can see, it's just been a straight up bounce for a while. Now so far this week, this is only Wednesday, the diamonds are still holding on to a gain. The spiders, the Qs, the Russells, everything else, not so much, which is fine. Gap down today, a lot of that had to do with today's move in most of these. But oil and gold have been just going south for a while. The Russells took the biggest hit. NASDAQ, which was doing pretty strong, it shot up pretty quick, hurt as well. But if you guys remember yesterday, I do believe we had a bifurcated close. I do think that the diamonds actually closed higher and everything else was slightly lower. So take it for what it is. It's kind of a non-event day, but we are definitely at resistance levels. So the argument could be made that we're in the longer-term downtrend. Now, it's tough to see with the SPY because this area here, I'll draw this, was what I would think would be more substantial. Now, it's definitely above that, and it looks like it could come back and revisit this. Now, this is the daily chart. It looks a little bit different on the weekly chart. It does, because this big move is kind of absorbed through the trend that it had the end of last year. So, and going into the beginning of this. So it's a little bit, I don't want to say misleading, because this surely looks a little bit more optimistic to me than some of the others. So let's take a look at the diamonds. And I'll try to draw similar lines because I thought this was also super interesting. There's this area. Looks the same. Could come back. Maybe retest it. It's optimistic. Like I say, once again, this isn't a representation of what really happens because we're only looking back here, folks, to March, right? If you take a look at this is April. That's all I've got when I took the snapshot. A bigger picture doesn't look as bright, if that makes sense. All right, and then the Qs, the most volatile. And this one did actually get above it quicker, I should say, than the other two, and actually tested it once already. I thought that was pretty interesting. It's off to the races. Doesn't mean that it can't come back and retest it. You can see the slope of the 20-day moving average is a lot more aggressive, and so on and so forth. But it's just kind of in the same situation. Now the argument, or I should say argument, the conversation came up of range bound, and I really could get behind that. I'll use the Qs as an example. Just find a resistance area, maybe even all the way back up to here. And if we do really respect that pivot point set March, then yeah, we could see a range between our 320, 350. Maybe we break up to 350, come back for 370, 350, and I'm talking through the end of the year. I'm trying to go as far out as I can, and the reason being is because it can give us an idea of where to trade and when it gets there, how to trade. So, half glass full, I would expect a range anywhere from 320, well, half glass full, 350 to 370 by year's end. Where we're at currently, it's pretty easy to pitch it between 320 and 350 as long as we get through the next earnings season unscathed, right? We still have earnings season. We've got a Fed that's aggressive, so on and so forth. So try to pick some ranges. Take a look at what's outperforming and underperforming. If the range is moving to the up end, be bullish. If it's coming back down to the bottom end, be bearish. That's all I can do is basically a little +1 and then a little bit -1 depending on what's happening with the overall markets. Okay, well, I told you I was going to give you my opinion. So let's jump over to the economic reports because there wasn't anything in there that was unexpected. Retail sales, let's highlight this one. Let me get my pen. I can highlight it that way. All right, so retail sales, that's that 0.0%. That's flat. That's a wonderful number. However, you get the real retail sales. It makes me laugh. So what is this? The fake one? Whatever. Anyways, so it's at 0.1%, which is a slight uptick. Now, understand, we did see this coming back down, which is very good for a slowing economy. The uptick is at 0.1. Yeah, it's not end-all, be-all. It's not like it came out at 0.5 or 0.6. You know, we've seen worse, especially with the CPI and the PPI numbers, not last time, but 2 times ago. So, a little bit of a bearish reaction. Could it be justified using just basically this number? Maybe. I'll give it a maybe. So, one to look for, which could change the markets, and it has in the past, is our Fed minutes. So they're coming out here at 2 p.m. I truly think if the Fed says, hey, in light of the retail sales number, maybe they're going to make a bigger deal of it. Oh, 0.1%. We wanted it to be negative. It's not. We're going to have to stay diligent and aggressive and hawkish. It could scare the markets. I don't know. I don't know if they're going to be that reactionary to this number. Or they're going to say, hey, we're happy, we're on track, everything's fine, and we get a rally into the close. That's kind of what I'm looking for. So long story short, folks, that's basically what I expect for the rest of the day. Now, for the rest of the week, we've got jobless claims, continuing claims. We've seen this number off a little bit. I think that the employment number was a bigger one because we added a lot of jobs. So we'll see if it really affects the jobless claims number, but that's not till tomorrow. And then not much on Friday at all. All right, guys. So the next is our outlook. Let me pull up the poll, launch it for you. All right. So there's the poll. It's launched. For you at home that are watching the review, you can watch it in real time. So it just kind of depends on what you'd expect out of the markets moving forward, where you're comfortable. It's interesting to see a lot of opinion when we get to these levels. The markets have definitely come off the bottom, definitely put in a very strong bottom from a month and a half ago. But the argument can be made that we could retest those lows, getting out, continuing out of the summer and into early fall. I think it's going to take a lot of bad news. It really is. It really will. We've got an economy that's ready for a turn down. We have prices right in front of our faces and a consumer that's willing to deal with it. So it just depends on how we react to it. Actually emotionally, right? That's a bad word for trading, emotionally. Okay, so you can see we're about a minute into it. We got an 80% vote, and looks like we're stalling out. So I'll go ahead and close it. And let's do this. Share. There is our results. So you can see oh wow, look at that. 45% +1, 45% -1, 35% 0. Interesting how we didn't gravitate to the 0. So there's slightly lower or slightly higher, which means based on this poll, we don't see the market staying 0 for very long. We're either going to go a little higher or a little lower. That's pretty cool, right? That might be a first. I haven't seen that before. All right, so let's get into what I'm talking about. And shocker, folks, everything's above. Everything looks pretty good. So my long term is going to definitely stay to +2. Now here is the speculation part. I'm expecting a pullback. And it's funny because am I expecting a pullback or do I really want one? right? So a lot of times I have an outlook or my opinion. I won't trade it, but it's things that I want to see. And you've heard me say this before. Where we're at, the extension, the move that we had over those last 5 days, the gap up, the shooting, the push up, I just think it's a little exhausted. With the gap down today, I don't know if there's anything catastrophic, but I'm expecting a little bit of a pullback for the rest of the week. All right, there it is. So let's get into the sector analysis. And once again, this is very difficult because I can't find anything that is outside of horrible or exceptional. Now, I did see the consumer defensive have a good surge up to the upside. I'm wondering if that's just because, hey, the markets are pulling back. Let's jump out of some of those higher flyers. Look at healthcare and technology being two of the weakest. Healthcare's had a very, very good surge. In fact, folks, it wasn't last week. It was the week before. We were looking at XBI and IBB. We were looking at a lot of the biotech ETFs, which, by the way, still look good. They're just in a little bit corrective move to the upside. So I think this is just kind of that push-pull. But nothing's just getting slaughtered. I'm not seeing, healthcare is down 0.84%. I'm not seeing anything down 3%, 4%, 5%, etc. It's just, whatever was cool, we don't like it as much anymore. So what was the outperformers? Consumer defensive and healthcare. Let's go to the consumer staples or defensive. And it was just a beautiful breakout from Monday. And it's not really pulling back. So sideways to up here, yes, this is definitely a tradable pattern. I do like it. I think it's going to stay comfortably over 76 if these markets don't pull back as I want them to, right? I just did air quotes. You guys can't see me do air quotes, but I just did. However, if they don't pull back and stay sideways to up, this is going to stay where it's at and start climbing towards the 78.80 level. On the weak side, I guess we can call it, is healthcare. Healthcare had a really good surge in June, and it's been pretty strong throughout that. It's been struggling through July to stay above its averages. They did cross, and it looks decent. Got above the 132 mark, stayed there, get up to the 134, and it looks like it's just pulling back. If this does anything like if it behaves anywhere the way that it has, I should say, since July, this is a nice slow diagonal trade all the way back up to 138, maybe even 140, 142, etc. So it just depends on the market condition as this happens. So let's do a quick conclusion and then we'll jump out to some trades. Look for corrective action this week. A pullback or consolidation. Now I had to put up my disclaimer. We are due, quote unquote due, but it's purely speculative. We're due for it. And this retail sales numbers was not bad. There was nothing really bad about it. But the futures reacted like, oh gosh, here we go again. And so far we don't have too much of a fall through to the downside. I just think that we were due for some corrective actions. The Fed minutes could really impact the markets as well. I don't think that the Fed's going to come out and spook the markets. However, it just depends on how they interpret what he says. We got to stay hawkish. We're going to stay on track. That might scare them to death. Hey, this number's not too bad. We might be able to ease getting further in, closer to the end of the year. That might spark a rally. I've seen that quite a bit with these Fed minutes, so keep that in mind. Sentiment is bullish, flat out. It's bullish. Retail sales was a good number, small uptick outside of energy. Just going to leave it at that, and then there you go. Just to remind you guys, Fed minutes will be after I stop babbling. So let me stop babbling, and let's go out and take a look at some trades that you guys are looking at. If I can minimize some stuff. There it is. Who's first? Let's go up to the top. Dan, looking at Nvidia. Whoops, let me get off my pen and we'll get started. So you guys can see, down across the board. NASDAQ 1.5%. That's okay, but they're just kind of meandering around. They're not really doing much. Nothing to write home about. Nothing to really actually get me spooked. So let's take a look at Nvidia. Dan's looking at a put butterfly with a 170 target. Okay. I keep forgetting I have to zoom into this guy. There we go. Let's stretch it out, make her look nice and clean. There it is. Okay, 170 middle with 10 strikes. Okay. Right there, right there, right there. That's wonderful. Excellent. Love it. Dan, give me an expiration date or cycle. What are you looking for? You looking for 3 days or a week and a half, what? That might help. But I do like it. Let me write it down. So it's definitely a bear. NVDA. September. Cool. Cool. Monthly expiration. He's got all the time in the world. It'd be nice to see this thing take its time, because when they take their time, you make more money. But if it flies down, he takes a profit here, and actually hits this point and then rallies back up, and this is September's expiration, he can take the other half there. Lots of flexibility. Thanks, Dan. Cool trade. Okay. Moving on. Let's go to... okay. A little bit more deeper Baidu here. A decent triangle. Needs to break below 130. Let me zoom in. Excellent. First target of 125. Second target of 120. Let's draw some lines. Yep. 130 is the entry point. Let me draw these lines a little further just so you guys can see what he's looking at. A little bit of a target there. Sorry for the scribble. I just want to make sure that you guys can see it. Sure. Maybe playing this gap. You could get a little bit greedy. You could look at a 115. I'm fine with it. Oh, I like the trade. I mean, I like the chart. Whatever trade you want to do on that. Diagonal, targeted butterfly. If you got your first stage target at 125, it'd be cool to do a 130, 125. And then when it expires, if it keeps going lower, sell the 120. So that might be a way to roll a diagonal. Or you could just cut it in half and do a 130, 120, 110 butterfly. That's wide. That's big. A little tighter. Use the lines I drew. If it breaks 130, target it at 120 with a 125, 115 leg. I like it. Let's put Baidu on the bear side. Okay, cool. Ronald, what do you think of Tesla? Well, that's personally or the chart? Bull call spread. Entry 910 stop 120. Okay. Let's look at it. Yeah. Look at that bounce that it had a few weeks ago off that rising 20-day moving average. Support there at the 850. Very nice. Entry 910. Okay, you want to see it go up a little bit from here, which is fine. Now, what's cool about this, Ronald, just be patient, right? It might actually get all the way back down to 900. Boy, it might even get a little lower than that. But in soon as it pivots, you can adjust your entry point lower. So I like 910 for where it is today, but don't be afraid if this, as long as it stays above that 850 or the 20-day moving average, then it's a viable pivot to the upside. But let's continue with your thought for now. Stop at the 865. Okay, that's probably what you're identifying. Is right around here, right? I'm trying to get as close as I can. This is a big mover. For stop, and then a target of 975. I bet you it's up here somewhere. It is. Okay. Yes, sure. Look at that. I like everything about it. Now, don't be afraid to jump around and like I was saying earlier, changing strike prices to fit the range. I mean, if I was to zoom into this much deeper, or even, I don't want to go intraday, but if you go a little deeper into this, you could move those strike prices up or down. Right now, you're looking at maybe enter at a 910 with a target of 975. I mean, that's $65 range. There's a lot of strike prices between that. So if it goes a little lower, just skew everything a little lower as long as the chart's still viable. So it's a lot more flexible than you think. And I believe it has weeklies, so you can be flexible in time as well. What becomes tough with these, just to let you guys know, the volatility of a stock like this is difficult to price options sometimes. So you got to be patient and run the numbers. You're going to find that you can change $5, $10 strikes ranges, and it's not going to change your costs much. So it's probably best to take a bigger chunk. I like the $50, $60 range and play that. All right. Thanks, Ronald. All right. Oh, real quick to add to that, I want to read just below that. He's looking for September weeks week 2 September. Cool. Thanks again. All right, let's go to Sebastian's got the Qs. August 26th, 340 mid butterfly. Looks like it's a broken wing. Let me zoom in on this. Draw some lines. There we go. We've got a 336. This is going to be tough. Let's start with the bottom there. 336, just slightly below where it's at. And that's going to be the low end. Targeted to the upside of 340. And then a 342. So he's a little bit skewed to the upside, meaning that this could exceed that and he'll be fine. Awesome. Love it. Love it. Yep. Hey, it's going to get to 340 at least, but if the markets continue to show some strength, let me draw this line all the way back over here, Sebastian. That's probably what you're seeing here. It's the consolidation here, early April. Excellent. Excellent. Oh, 336, not 326. Thank you. Sorry, thanks. Sometimes I don't wear my glasses. All right. 336. There we go. There we go. And there we go. Now that looks cleaner. Does that look cleaner? Yeah, I think so. I love it. I still love it. I still think it's great. Thanks. All right. Moving on. What do we got here? mtmatch.com. September 2nd. So, geez, how many is that? 2 weeks? 2.5 weeks. Zoom in on it. And James is looking at a 1720.23. 17. Whoa, I'm off. James, I'm ready. Oh, there it is. I'm reading your second trade. 53, 59, 65. All right. Put butterfly. 59.65. 59. This is tough. These are really hard to draw, folks, without having to getting the right numbers. What was the low end? 53. Okay. Basically targeting that low point. Love it. Write it down. Now, folks, that is a September 2nd, which, let me pull up my calendar, which is 2.5 weeks away. 2.5 weeks. So you're giving it some pretty good time. But I love the targeted because you can take it once it gets there. Okay. Thank you. Now the second trade, CHPT. There we go. These numbers will probably make a little bit more sense to you folks. There we go. Okay, so we're looking at a 1720.23. Okay, 1720. I'm going to have to zoom back out to get to 23, but you could guess it's probably right around there. I do like this. Let's just target. And this is going to be the 26th of August, which is 2 weeks, or a week and a half. A week and a half. Excellent. Excellent. Now, one step of advice, just not assuming anything, James, but I'd wait for that to pivot first before entering the position. So once, because it might still be going down, it might hit the 16, but once you get an established pivot point, then I'm on board. Then I'm on board. So, awesome. Thanks. Let me write that down. That's a bull trade, right? CHPT, because it was a targeted butterfly. We got a lot of trades today. All right, Neil, let's get to the ABBV. Zooming in. Diagonal put spread. 145, 140. Awesome, awesome. Let's draw some lines. And your expiration cycle is, that's so cool. Because now it can just revisit that, and if it doesn't break, you're totally fine. But if it does, you're ready to roll. I like it. September 9th, August 26th. So a week and a half is the 140, and then September 9th, which is the two and a half weeks, I believe, right? No, 3.5 weeks. Excellent. Excellent. A, B, B, B. These are some good trades here, guys. Great work. All right. AT&T. Now, folks, you probably saw that I had AT&T on the bear. I just can't not look at it bearish. Now, full disclosure, I haven't traded it, but I've been watching this thing for 4 weeks. I'm trying to find a way to get into it, but the way that it falls, it's just a little difficult. Let's see what Dan has for us. Maybe you can help me out here. Just staying at the 18.5. Okay, let's see. Just sitting here, and it has, because you could see gravitated, came back through it. Now it's back up to it. So yeah, I mean, we could justify staying at the 18.5 and then just do a buck outside of each, right? Okay, okay. That's not a bad idea. Let's put AT&T down on the sideways trade, because I've been trying ever since that gap that I had July. I've been trying to figure out a way to play this bearish, and I just couldn't do it. You could see that it kind of closed it back here. You know, it kind of bounced off of this area that it set in April. So maybe sideways is the best trade. Well, thanks. Thanks, Dan. I'll take a look at that. Let me write it in there. All right, guys. Awesome. Great class. Let me go back to this home screen so you guys have something to look at while I type in these trades. And we'll go from there. So trading-wise, you guys have been great, really good. The activity isn't super aggressive, but the trades have been really good. So, awesome job. Keep it up. Let's see. We had CHP, T, AT&T for a neutral trade. Thanks for that, Neil or Dan. That's cool. NVDA, BIDU, MTCH, and BBV. All right, let me share this with you guys. So here's our list, and it's a good one. These are all really cool trades, and for you guys that just go to the end of the video, that's fine. You can write down the trades, but it's cool to listen to the setups, because I do like a lot of your guys' setups. They're really, really nice. So good job. Okay, guys, thank you so much, as always, for your participation. And if you guys got any questions, you know how to get a hold of me. Talk to you next time. See you guys.